We're literally 24 hours away from Trump's tariff liberation day. And last night I had a dinner with someone from the White House. He's not exactly an insider. I mean, you could say he's very close to the White House, but I draw the line because he's not exactly an insider. And he gave me a lot of insights as to why they're actually doing these tariffs and how long the pain in the market is going to last. And I want to show you exactly what he showed me. I want to show you the thinking of what he showed me. He also gave me a very stern warning. He said that in the next week, both longs and shorts are going to be liquidated. And he kind of warned me. He said, expect volatility in the next week or two, because whether you're long or whether you're short, he said the words, he said, both longs and shorts are going to get liquidated. So I'm going to break down the thesis of exactly what he told me. And again, I say, he's not an insider in the White House, but he's as good as an insider in the White House. So if that sounds good to you one day before Liberation Day, you know what to do. Subscribe to the channel. We're very, very, very close to 1.16 million subscribers, which you guys are keeping away from me. And if you're a regular, just obliterate the like button and let's get going. You know, I'm very wary to use the word insider, because the minute you say insider, then because the markets are down, and when people are when the markets are down, people lose money. And then when you say the word insider, they're like, oh, he's trading on inside information, unfair. So I want to say upfront that it's not inside information. And the reason is this guy doesn't actually work inside the White House. He's not like, he doesn't have a White House badge, but he's very, very, very close to the White House. And he gave me a whole lot of insights as to why everything's happening, why they're doing what they're doing. And he also told me inadvertently, without actually trying to, he actually told me when the pain would actually end, or at least when they're planning to end the pain. And he gave me a whole lot of insight, but the biggest warning he gave me was be careful being long and short now, because the next week is going to be volatile. And that's what I want to talk to you about. I want to show you where the volatility is going to be coming from. So if that sounds good to you, obliterate the like button. I'm going to get on with the big alpha of the show. You can see that I think the NASDAQ has just opened fractionally down. Let's just refresh that. You can see that Apple's down 1.18%. You can see Google's down. So very, very, very flat day on the market. When we look at Bitcoin, 83,671. Everybody is waiting for the Liberation Day. And the tariffs that actually come into effect tomorrow basically raise us to the highest level of tariffs since the 1800s. But it's all part of a big plan that Trump is actually executing against. In the meantime, what you're seeing is a whole lot of exactly what you'd expect ahead of tariff day. Some companies or some countries are trying to fight it. And what they're doing is they're forming these unions and colluding together to try and fight Trump. So in this case, China, Japan, and South Korea said they were going to respond as a collective to Trump's April 2nd reciprocal tariff day. And that's as per Reuters. Mexico is announcing that a response is coming. In the meantime, the EU is saying, look, they're going to offer trade concessions to avoid the reciprocal tariff. So now the negotiations are starting. The last minute negotiations are starting. Just some countries, the stronger countries, are putting out their chests and ready to go against Trump. And some are trying to back down. So two approaches are basically happening. We also had Trump saying that he's going to be relatively lenient on tariffs, which is kind of weird because he's also been quite strong about the tariffs. And it kind of feels like one day before the tariffs, he's starting to back down. But don't buy the facade, because this is a trick that is used to manipulate markets. Today we're okay because Trump says he's going to be soft. And tomorrow he digs the knife in and he basically drops market a whole lot more. So be very, very, very careful of the headlines now. Everything now, the entire media is working extremely, extremely, extremely coordinated. I'm going to show you a couple of other instances where the media is working extremely, or the insiders are working extremely coordinated with the media to play the narrative and to move the markets. I'm going to show you conclusive proof of that. So look, he gave me a warning and he said, look, number one, Trump is looking at the markets, but he's going to tell you that he's not looking at the market. And the next warning he gave me, he said, in the next 24 to 48 hours, and maybe even the next week, be careful, because a lot of people are actually going to get completely wrecked. Let's talk a little bit about this tariff game and why this tariff game is important, because it'll give you a feel for what Trump's end game is and why right now the collateral damage of the market is probably not what he's looking at. The issue that he has is and the fight that he's taking on is a much, much, much bigger fight. And I think a good summary of the fight is this interview with Carolyn. I mean, she's
Look at the unfair trade practices that we have. 50% from the European Union on American dairy. You have a 700% tariff from Japan on American rice. You have a 100% tariff from India on American agricultural products. You have nearly a 300% tariff from Canada on American butter and American cheese. This makes it virtually impossible for American products to be imported into these markets, and it has put a lot of Americans out of business and out of work over the past several decades. So it's time for reciprocity, and it's time for a president to take historic change to do what's right for the American people, and that's going to take place. Look at the unfair.
So you've got the situation where the US is the biggest consuming nation in the entire world, right? The biggest nation of consumers in the entire world. And these countries have put on these crazy tariffs, which basically the US has had tariffs, very few tariffs, are on Japanese products, for example. But the Japanese have had an 800% tariff on US rice going into Japan. And so if you were walking into the US and you were the CEO or the president of the United States, and you saw that this was happening, what's the first thing that you'd do? Is you'd say, hold on a second. Why should I allow you to send your stuff to my people? But when we want to send our stuff to your people, you put an 800% tariff. Doesn't sound fair. And to be honest, what it does is it does destroy the US economy. There's a whole lot of companies that could export a whole lot more and become much bigger. And when they do become much bigger, actually prop up the indices like the Dow Jones, right? Because those are the manufacturing companies. But they don't, because there's all these tariffs that are actually imposed on the United States, right? On top of that, there's a second problem, right? And I think that this is a very, very, very smart tweet by Zero Hedge. He says, 3 shocking statistics. Over 1 year ago, 85% of the US job market growth was in the government and sector dependent on government spending like health and education. Basically, he's saying that the entire US economy was actually a government spending-led economy. Imagine that. Like, you've got the United States economy, and the government is creating all these jobs, spending on all these contracts to create all the jobs. 85% of the US growth market jobs was spent by the government. In 2024, 1/3 of GDP came from the government, from government spending, a record high. 1/3 of the GDP of the United States came from government spending. So instead of other countries buying US goods, which they couldn't do because of the tariffs that other countries had placed in the United States, you now have the government having to subsidize this by becoming the biggest spender. Excuse me. Yeah, so the government was becoming the biggest spender. And so you've got this government spending-led economy, which is not a very healthy economy. Further to that, he said every G20 country has higher tariffs than the United States, save two, and most countries hide the true costs in expensive barriers like quotas, price controls, labeling requirements, and a whole lot of other rules. So that's the game that's being played here. The United States can't export its goods because other countries are imposing tariffs, whilst at the same time, in order to keep their economy alive, the government's spending. The only thing is that when the government's spending, it is spending by taking out more debt. Because where else does the government get its money from? Tax and debt, right? And so the government is spending $37 trillion have been spent by taking out $37 trillion of debt. You'll agree with me, that's not sustainable. Specifically, when you put that on the interest rate chart and you say, hold on, $37 trillion of debt, 4.5% interest rate. So what's 5% on 37 trillion? Tura, you did the math. That's what, $1.5 trillion a year in debt repayments at the moment?
No.
But now at 4.5%, it's $1.5 trillion a year that the government now has to, because the government is spending to keep the economy going, they have to spend an extra $1.5 trillion a year on paying interest rate repayments. It's simply unsustainable. And the US has to do something. And Trump knows that it's going to mean some short-term pain, which is exactly what happened last time. But it's going to lead to long-term gain. And let me show you long-term gain. And let me show you exactly how this happens, right? In 2018, when Trump actually did this, he said, January 20, 50% tariffs on solar panels and washing machines. In March, 25% on steel and 10% on aluminum, or as the Americans call it, aluminum. June, $50 billion on China starting a trade war and markets fell 20%. But then in December, the markets actually bounced. There was a 6-month lag, and the markets actually bounced. So what happened between the time that he imposed the tariffs and the time that the market actually jumped? I'll tell you exactly what happened. The United States, or the investors in the United States market, realized that the companies inside the United States started to benefit from these tariffs because they started to manufacture more internally. There were more jobs created internally. They started to spend more internally. And so the markets eventually, it made the American companies stronger. And therefore, in the short term, there was a little bit of pain. But in the long term, the markets actually started rallying because the American companies became healthier. Why? Because either they were manufacturing more in the United States, which they were keeping for consumption in the United States, or they started to export because countries reduced the tariffs and therefore made United States companies stronger. So was it worth the 6 months of pain? Abso-fucking-lutely. So we go back to December 18 and we go back to 2018 and we look at the chart of 2018. And what we can see is that this was an absolutely good bet, right? So you can see there was a dip and then everything started to run again and we got all-time highs until, of course, COVID came and basically destroyed the whole party. So what's the net effect here? The net effect here is that you take some short-term pain to get long-term gain. You start collecting a whole lot more money in tariffs because there's certain things that you can't stop importing immediately. It takes time to set up plants in the United States. It takes time to move the manufacturing into the United States. So what do? In those times, you actually start collecting a lot of tariffs. So the government starts now collecting a whole lot of money in tariffs. Now, here's where it gets a little bit interesting. Generally, that is supposed to make prices go up, and that will make prices go up. But there are ways to actually give those price to compensate consumers for the prices that are going up by giving them full-blown stimulus checks. So think about this. Think about a scenario where the government collects money on tariffs. It makes prices higher, but then they give a tax refund or a dividend check, which is exactly the same as a stimulus check to the low-income earning people. And then you get a similar scenario to 2020 or 2021, where you all of a sudden have a whole lot more money in the economy in the hands of people. So you have slightly more expensive prices, which does drive up inflation, but you also have dividend checks, stimulus checks, however they disguise it or however they guise it, going back to consumers. And everyone's now talking about this. Charge tariff, everyone pays more for stuff, then give tariff funds back to the bottom 50% of income earners via a check in the mail. Check recipients then spend it to buy more stuff, and because that's what the bottom 50% always does, and they almost act as a huge stimulus, eventually propping the economy. So long story short, this is what he said to me. He said, listen, in the White House circles, people are starting to talk about this economic uncertainty and how long this economic uncertainty is going to last. And then he let slip. And he wasn't trying to let slip, but he kind of said to me, he said, look, pretty much everybody in the White House has written off the short term, and they think the market will turn sometime around Q3 or Q4. That's what they said. So initially I said, I think the market will turn around May. After having this dinner last night, and he said Q3, Q4, I'm kind of thinking to myself, okay, so Q3 starts on the 1st of August. So probably August, September is like somewhere between Q3 and Q4. And that is when everybody also gets back from vacation. So you kind of get the sell in May and go away. Everyone comes back in August, and then the markets actually start to pump, and that's pretty cyclical. September, the market actually starts to pump, and you can remember that the crypto pump also started sometime around September this year. And so people go away, come back, and around September. So as much as I hope that the markets would turn in September, and of course I remain hopeful, if I go back to the fundamentals and say, look, in order for things to turn, these policies have to take effect. And not only do the policies have to take effect, but we also have to get data readings around these policies, right? So like, okay, the policies take effect. We then have to get the data. We have to watch how much the tariffs actually bring in. We have to watch how much is collected. We have to look at what happens to GDP growth. And those readings take time. They take 1 or 2 quarters. And so probably more realistically, as much as I'd love to see the markets turn in May, and there's probably a 20% chance that they will, probably more realistically is that August, September, we get a pump. And then what the Trump administration says, they come out and they say, hold on a second. We came in, we inherited a very bad economy. The markets crashed as soon as we came in, but we did what we had to do and we turned the markets. And look, from September on, for the rest of the Trump, for the rest of the Trump term, the markets were pretty much up only, similar to what happened over here, where Trump came into power. The first time, the markets took a bit of the markets took a bit of a dip. Let's go back there. Let's go back the DGIA. The markets take a bit of a dip in 22. Let's go back to 22. Markets take a bit of a dip over here, all the way down to here, which it goes from 17.3, so that's about a 15% dip, and then it's pretty much up only for the rest of the Trump presidency. One little tariff announcement over here, which took things down, but then pretty much actually up only until the COVID, and that's when the markets went haywire because of COVID. So what is the thesis? The thesis is, and this is coming, it's been now validated by someone who's a White House, not an insider, but he's like an insider. He says, unfortunately, they don't really care about the markets. They're willing to take the pain until about Q3, Q4. When Q3, Q4 comes, everything will start to turn, and that is pretty much exactly what lands up happening. In the meantime, there's going to be uncertainty, and you can see that there is a lot of uncertainty, right? And remember that uncertainty is also part of the narrative here. They want you to think that there's uncertainty, because the more uncertainty people talk about, the more uncertain indicators that people talk about, the more uncertain the man in the street becomes, right? So the more people like Larry Fink go into the market and say, Larry Fink, as the headline says, BlackRock CEO Larry Fink says almost everyone he talks to is more anxious about the economy than any other time in recent memory. Now, I guarantee you that's not the case. But he also says recent memory. Recent memory is like last week. That's recent memory. Especially if you smoke certain strains of weed, because you lose your short-term memory. But so what you have here is you have Larry Fink, who's an insider. Now just think about it like this. You got Larry Fink, he's an insider. They're all beating to the same drum. You got Stock Besant, you've got Larry Fink, and they're all beating to the same drum. And the drum is, we are not sure, there's peak uncertainty, we are very worried. Why? Because when the normal man on the street hears this, he starts to save his money. He says, hold on, if they're all talking about uncertainty, I'm saving my money. They stop spending, they decrease inflation. They stop investing in their companies. They don't hire the extra truck. They don't buy the extra crane. They don't build the extra house. They don't build the extra warehouse. That slows the economy, which is exactly what Trump needs if he's going to refinance this debt with much lower rates. So right now, it's all about uncertainty. That's what it is. It's all about uncertainty. That's the name of the game, and it's going to remain like this until May. Now, can we get pumps? Of course, we're going to get pumps, and I'll show you where there could be a few pumps, right? There's also certain coins that are going to carry on running, but I don't think that we're going to see a continuation of the bull market at least for the next 2 to 3 months. Maybe we're lucky we get it in the end of May, which is what I was hoping for, but probably more realistic now, we're talking about an August full continuation around the bull market. So that is what the thesis is, and it was again confirmed by this individual who I'm not really going to name. In the meantime, if you are looking at markets, it hasn't been an amazing year-to-date performance. You can see it's been a terrible first quarter for stocks. Apple down 10.92%, Nvidia down 20.43%, Google down 20%, Meta, which is one of the hardest good performing tokens, down, Amazon down 14.11%. Generally, not a very good period for stock markets. If we let's look at the 1 month on the crypto, which this is 1 year, so 1 year is a little bit skewed. But you can see that this was the worst Q1 since 2022. So one of the worst Q1s that we've ever seen, but a relatively bad one. You can see that if you look at these numbers over here, only Q1 2001, 2001, 2001, 2008, and 2020 were lower than what we were doing. And you can see also just from a chart structure point of view, all the big charts, the NASDAQ, the S&P, they're not in a very good chart structure. So Q1, you could say, was a disaster for TradFi markets. The S&P suffered the largest quarterly underperformance relative to the rest of the world that it's had in 37 years. So you could say that Trump's Q1 wasn't good for any of the stocks. Even the best of the tech stocks capitulated eventually, which was Meta, which broke down below the 200-day moving average. And again, why is this happening? Because then the narrative can be, we inherited a bad economy from Joe Biden. As soon as we took over, everything just collapsed. But we fixed it. And then we took you guys to Valhalla, right? And that's exactly what the narrative is going to be on Trump's legacy, right? And so for now, you got to be patient. Don't have dry powder. Be patient. Don't take too much leverage because, as he said, both longs and shorts are going to get liquidated in this thing. You can see just how bad it actually was. I mean, Trump's first term, Trump's second term. You can see exactly how the two. For Bitcoin, I mean, we had a monthly candle. Bitcoin's holding amazingly strong relative to what's actually going on. And I think the reason why it's happening is because of Michael Saylor, as we spoke about yesterday, right? Like Michael Saylor has this, he's been the buyer, the main buyer in the markets. And so you can see that Bitcoin candle held very well. Bitcoin did, relatively okay. Minus 11 for Q1. ETH had a fucking horrendous quarter. Like, not since 2018, and even 2018 was as like just it was bad. And 2018 was like the first retail bear market. So that's pretty much what 2018 was doing. For the record now, a lot of people are going to start trying to sell you this crazy hopium. Now, look, you know me, I'm positive and I'm optimistic, and I'm always telling you like to buy when I think it's time to buy, but I don't believe. For the record, history shows that April is a very strong month for the S&P 500. So if you want to base your investment thesis that's true. And then someone says, no, you should never invest purely on seasonality, but it's worth noting that after the 7 worst Marches ever, April saw green in each. So, okay, maybe we'll get a green April. Maybe. It is definitely a possibility. All right, let's shift our attention a little bit to altcoins. I do think that there's probably 2 altcoin trades that are worth talking about today. If you're a trader. As an investor, I don't know. If you're a trader, I think there might be 1 or 2 trades that are actually coming up. Before we do that, I don't know if it's me, and I don't know if maybe the Twitter algorithm has me in its sight, right? But all I'm seeing is that scams are on the rise. Like, so you got this thing that I've seen multiple times saying, be careful when you verify with Cloudflare. It seems to be that when you verify here, you download a malicious file to your computer, and that drains your wallet. So be careful. I've seen this once. I've seen this twice. So it could be the same thing, or it could be that a lot of people are actually picking this up. Be very careful of draining stuff. Also, I don't know if you saw this, Andre saying, what the fuck is going on? Someone has been hacked or banned. I don't know. Otherwise, I can't explain what's going on. Too many unrelated assets are starting to dump. And you can see there's a lot of assets that are unrelated that are actually starting to dump on the market today. Don't know exactly what's going on. Even a hacker who stole, 2,930 ETH from ZK Lend, soon after he used Tornado Cash, and then he got fished. He got fished, losing all his, a hacker got fished, losing all his ETH. So I don't know if it's just that the Twitter algorithm has got me in its sights, or if this is like really what's going on. But I can tell you, guys, you need to protect yourselves. I cannot stress it enough how important it is that you protect yourselves. Now, again, I say to you, we don't do a lot of shills around protection and stuff like that. Generally, before Father's Day, we'll do like a Durex plug just because, for Father's Day. But just in general, what you need here is use this product. It's called Kerberus. It's an extension that you basically download. You just press it here. You download this extension, and it basically protects you because as you're surfing, while you're surfing, it's reading the code of the website to see if this is a draining site. Like, unlike its competitors, and it's got a lot of competitors, but unlike the competitors who have a list which has to keep getting updated, what these guys do is they actually have this extension that's installed into your Google, which basically reads the code of the site and says it prevents you from actually taking trades on Solana and on Ethereum if you're on a draining site. There is a link below. Use the link, because if you go and use your own links, good luck. If you get drained, you get drained. Also, of course, use a VPN if you're not already using a VPN. Anyway, as I promised you, let me give you 2 trades that I'm actually watching at the moment. So the first trade that I'm watching at the moment is not going to come as a surprise. It's Gunzilla. So what is my thesis around Gunzilla? Much to Josh's dismay, right? I think that it might be time to actually buy Gunzilla games. Why? Here's the thesis. I'm not saying buy it to marry it. I'm saying buy it because I think there's going to be a trade. Why do I think there's going to be a trade here? Because only 6% of the tokens are in circulation. and they withheld paying investors a lot of their tokens. Now, generally, when you have a token which was supposed to pay investors their tokens but didn't pay investors their tokens, generally it means they don't want tokens in the market. Those that have got tokens have been dumping. When they feel that the dump is over, what are they going to do? They're going to buy back they're going to start buying back the tokens and pumping the price. I think that there's a trade to be taken here. I think that this is more or less near the bottom. If not, maybe we get to a $500 million market cap. And then I think they pump this thing to $1.5 billion. Let's see if I'm right. Josh doesn't think that I'm right. Josh, are you fading me on this one? Okay, you're fading me on this one. Andrew, are you fading me on this one, or are you taking this trade with me? I posted it in front runners. You know, I post in front. If I post something in front runners, it's there. Legit. It's on Bybit. So if you want to trade it on Bybit, there is a link here. Go and trade it on Bybit, or go trade it on any one of these exchanges. It's there. The other trade that I'm looking at is a new protocol. So this is a protocol called Keeta. We have spoken about it before. It's up 37.5%. The reason why it's up 37.5% is because it launched its testnet today. And the testnet is kind of going according to plan, right? So what is this token called Keeta? It is a L1, a super fast L1. It's not a smart contract L1 yet. It's more a money L1. It's a L1 to take on things like Stellar, to take on things like XRP. And it's supposed to be like a money L1. Now, the interesting thing about Keeta is that Keeta is actually backed, a big part of their backing. I spoke to the team the other day. A big part of their backing is actually Eric Schmidt, which is the ex-founder of Google, right? Ex-CEO, ex-founder of Google. He's founder of Google, ex-CEO of Google. So he is the guy that's pretty much backed this thing. Now, I know the numbers here. It's not like he gave them a $100,000 check. He gave them a big amount of money. And it looks like this thing could become one of the L1 players. Now, it's got a fully diluted valuation of $177 million. Truth is, I don't buy things after a 40% pump. I wait for the market to cool down. But definitely one to have on your radar, because if they do crack it, I mean, where is an L1 for 177 million fully diluted market cap? So we keep our eyes on Keeta. You now know the story. And we're keeping our eyes on Gunzilla. I'm putting timestamp, $650 million market cap. That's the entry point.
Yes.
You got it?
Yeah.
Josh, you got it? Amazing, sir. So with that, my friends, I shall see you tomorrow on Liberation Day. Hopefully we'll all be liberated. Until then, trade well, my friends.